good morning and welcome to this edition of Buy Now, Sell Now right here on ET Now. I'm Cheryl D'Souza along with Varun Hiramat. And Varun, definitely if we look at what the markets are doing this morning, they are holding on compared to what the global peers did. We did come on with a very weak handover, and that indeed is the top headline this morning. And that is the Dow saw the worst cut in 5 months along with S&P 500 due to rise in COVID-19 cases globally. Nifty right now is trading near the 11,650 mark, barring the pharma and energy indices. All others are in the red. A couple of earnings that's come overnight, and if you look at Axis Bank, L&T and Hero Moto with the top Nifty companies that came out with their earnings post market hours yesterday. You have RBL Bank as well as AU small finance banks as well. Let's shift focus and let's see which are the earnings that we are expecting today. Among the Nifty, it is Maruti, you have BPCL. Also, apart from that, you have Bank of Baroda, you have Indigo as well as Canara Bank that are expected to announce their Q2 earnings today. And lastly, the top headline is that all-exclusive interview of Prime Minister Narendra Modi to the Economic Times, where the Prime Minister said that the global investors are taking note of the reforms, and also their aim, the government's aim, is to make India a preferred investment destination, and that is from the exclusive interview of Prime Minister Narendra Modi to the Economic Times. But for now, Varun, how is markets faring?
Cheryl, the markets are definitely facing some headwind today. We have recovered from the morning lows, and the breadth has recovered as well. But I mean, look at that massive fall we saw in the US last night. So there's no doubt that we're under pressure today. Currently down around 0.40%. So we have seen worse. But I mean, it's across the board, right? It's not like there's a select pocket which is losing. Your bank index is down nearly, 0.7%. Your auto index is down nearly a whole percent. The mid-cap index is down 0.7%. So that tells you that it's not just the large cap stocks, it's also a broad-based decline that we're seeing. Breadth currently in favor of the declines, 31 to 19. And some individual winners and losers for you: Asian Paints, Ultratech, Dr. Reddy's, Techem, Shree Cement doing well. On the losing side, you have an L&T, Tata Motors, Titan, ONGC and Adani Ports that are not faring too well today as far as the Nifty pack's concerned. So we'll revisit the market later on in the show and get you an update. But let's now chat fundamentals and technicals with Kunal and Vivek Bajaj, who are with us. Good morning and welcome to the show, both of you. Kunal, what's the current mood of the market? And in light of that, do you have any recommendations for our viewers?
So, good morning, Varun. I think it's a very somber market today from what we have seen the last few days. I think traders would not want to fret too much away because of the kind of volatility which we've already seen the last 3 days. But for the first time in this last 3 days, we are seeing a follow-through price action. Now we can attribute too many reasons, that whether it's global sell-off which is happening, whether it's the the jitterness or the nervousness heading into the US elections, which is one of the major events or more anticipated events for the markets lined up. But I think in all of these regards as well, the markets were bound to go through a round of profit booking. And when you have such a steep rise on the back of the price actions, you're bound to see some bit of volatility and maybe a sharper retracement as well. So I don't think that this comes as a big negative surprise for the indices cooling off. In terms of levels, I think I pointed out yesterday as well that one of the major supports for Bank Nifty is the 89 exponential moving average, which apparently has worked out extremely well for the Bank Nifty on the hourly charts, and that support comes very closer to 23,850, 23,950 zone for the banking index. So I think till the time the Bank Nifty is trading above the critical moving average as well as the price-based supports, there could be a chance that you might see more stability coming back into the indices. Now, individual stocks as well, there's not too much of a damage, what you're seeing today for the individual names, of pockets of stocks, except for a few names here and there. I think largely the mixture is much better than what we've seen the last couple of days. So largely, I believe that the index could remain a consolidation. And in that regards, I would suggest a mixed trade, one buy and one sell. The first one is about Tata Consumer. Interesting chart. I think on the hourly time frame, the stock is now showing signs of trying to break back above its swing resistance. 496, 497 was apparently the previous swing high for Tata Consumers on the closing basis as well on the hourly charts. So I would expect that some degree of resurgence could come back into this name as well. Would suggest a buy on Tata Consumer for a short-term targets of 510 and stop loss could be kept at 485. I would term this as more of a low risk trade. For the other high risk trade, it's a sell on Piramal Enterprise. Again, a chart which I think has been just about dragging lower. Week after week, we've seen weakness coming into this stock as well. Yet again, a break below its critical 50-day moving average support as well. So it was already below its 200 DMA. Now the stock has broken back below its 50 DMA as well. So I would sense more weakness, which could probably come in line for this stock as well. Sell with a target of 1200, stop loss at 1280.
All right, and those are the high risk and low risk idea coming in from Kunal this morning. Vivek, good morning. This is Cheryl on the other side. What are your high risk and low risk idea for our viewers?
So I think these events come wise in the market overall, which leads to volatility. I think these are the good time to build up good quality portfolio stocks. And we all knew that US election is due and the volatility will be there on the runway to election. So it's not something new which is happening. So I would suggest for a long-term investor perspective, someone who wants to play for a longer swing, there is a great chance opportunity for you to build up a nice stocks in the portfolio. I would recommend look at cyclicals now, because in this kind of an interest rate regime where home loan rate is literally at a all-time low and the FD rate is also very, very low, I think cyclicals will do phenomenally well over a period of time. So I would suggest look at the residential real estate play. I think overall the demand offshoot in the residential real estate has gone up. And maybe it's a build-up demand which was there, which is now getting executed. But I think this is going to continue for a long time now. The real estate sector, which did nothing in last 12 years, I think this sector is poised for some kind of a major long-term rally. So I would say the companies which are focused on residential play, which could be say Suntech, which is a Mumbai-specific builder, or Oberoi Realty, or Sobha. These are the guys who are very, very focused on residential. Last time when we discussed, we talked about Godrej Properties, but now this stock has become very expensive. It has gone up. But I would say that at every fall, building your portfolio for real estate play is going to be a very, very good strategy for long term. So these are risky strategies. If we talk about non-risky strategies, are again companies which have some value embedded and now they are getting into the growth path. Say for example, NIT Limited. Now this company has been in education for a long period of time. They did some strategic mistakes. Now they are trying to recover from those mistakes. They have phenomenal cash in their books, and with the focus on e-learning and online delivery, I think NIT Limited is one stock which should always be there on your radar for your portfolio build-up perspective. And the evergreen stock, Dabur and Reliance, I think these are the two stocks where every time you see a fall in the market, you should find out opportunities to grab these stocks for your portfolio.
Okay, Mr. Bajaj, thanks for that interesting view. Let's now go across to Jayesh, because it's expiry day, right? So part of the reason why some people believe the market will still do well today despite weak global cues is the expiry. Jayesh, as usual, has done a comprehensive analysis and come up with some interesting data points. Let's listen in.
The October series has been dominated by the large cap stocks and in particular the Nifty Bank. But first let's have a look at how the rollover picture looks like. For the Nifty, the current rollover at 53% is lower than the 3-month average of 59%. However, this is quite the opposite for the Nifty Bank, because the current rollover stands in excess of 64% as compared to the 3-month average of 54%. If we look at the overall index performance, the Nifty Bank really stands out at more than 18.5% return for this series itself. In fact, it is on track to post the best series that we've had since in over 30 months. For the Nifty, 8.5% return for this series, and it is also on track for the best series since April 2020. For the mid and the small cap index, more than 6% return for this series itself. But if you have a look at the sector performance, there have been a whole host of winners that we've got this time around. The Nifty Metal Index has been the outperformer, along with the Nifty IT and the real estate pack. Not too far behind are the auto and the infra index as well, while you have the Nifty Pharma and media index that have returned marginally negative for this series itself. Talking about the stock gainers, you have a lot of high-flying beta names over here. In particular, the cement names ACC and Ambuja Cement stand out over here, and you have the two large banks, Axis Bank and Kotak Mahindra Bank, which also feature in the top 5, along with Shriram Transport Finance. As far as the losers are concerned, you have Vedanta and UPL that have declined more than double digit, and you have BPCL along with Reliance Industries, which actually explains the underperformance of the Nifty that features in the top 5 losers.
All right, Jayesh, thank you for taking us through and giving us a roundup of how the October F&O series is looking like. On that note, thank you, Kunal, as well as Vivek, for joining us and giving us your view on the market and also your high risk and low risk ideas for our viewers. And on that note, we'll slip into a break on this edition of Buy Now, Sell Now. Stay tuned, more on the other side. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's get you an exclusive details of the CCA meeting that's going to be held today and what's on the agenda. Karishma is here with all the details. Karishma, what is the CCA likely to take up in today's meeting?
Well, the cabinet today is going to take up the much awaited discussion on ethanol pricing. What we are picking up is that Petroleum Ministry's proposal on reworking on ethanol procurement price is being taken up. In fact, what I'm picking up is that the price that has been proposed by the ministry is of a hike of ₹3. Initial discussions spoke about a ₹1 per litre hike. And this ethanol price hike is happening due to the change in the FRP prices of sugarcane. We also broke this story initially 2 weeks back that government is mulling a proposal for cabinet to take up. The government is very keen on cutting down exports of sugar by 20% each year and rather divert that exports towards producing more and more of ethanol. For this, a lot of initiatives have also taken up. Cabinet, if today approves ethanol price hike, this will definitely be a benefit for the sugar mills also and for the OMCs also, who can then proceed with their tender contracts. And December 1st marks the season for ethanol production. So that will be a good news, keeping in mind the sugar season is already underway. The meeting is currently happening, and today there will be a press conference that will give details more on this.
Okay, thanks for that, Karishma. Of course, it's an all-important price hike that will impact all of us consumers as well. So we'll be keeping an eye out for that. But time to switch gears, and of course, we have a very important management with us, Mahesh Kumar Sharma, who's the MD and CEO at SBI Life Insurance, post their recent earnings. Good morning, sir. Thank you so much for taking out the time to chat with ET Now. The first question we have for you this morning is that the company has delivered a healthy growth in Q2 FY21. It's definitely gathered momentum if you compare to the previous quarter. New business premium as well as reported a jump of 15% YOY in H1. So what's your outlook on NBP growth for H2 of FY21? Can we keep pace with what's happened recently?
We have grown 15% in new business and about 22% overall in gross written premiums. So that's on the back of very strong renewal growth. New business premiums we expect, according to internal targets, to be where we were last year or even better. So we are aiming for a positive growth internally, and we think that we are in line with our targets right now.
All right, sir. And is the new business premium back to pre-COVID levels? Because that's what we're trying to understand. Has the YOY gap been bridged? And if not, when do you see it normalizing and reaching those levels?
Some things have changed. So if you see the numbers, the top line, yes, we are 15% over where we were last year. So that definitely is a positive sign. But of course, the COVID has changed the picture. So the mix of products has changed a little bit. And the way we distribute, it's become very digital and non-face-to-face. So we are able to do things digitally. It's not the same thing, but if you look at overall levels, yes, we are getting there.
Mr. Sharma, the value of your new business declined by about 12% on a year-on-year basis, while the VNB margins expanded by about 70 basis points. Share the growth outlook for VNB and the margins, and as well as given the focus on the protection business, can we expect further expansion in the VNB margins?
So our targets for the margins is definitely that we are looking at growth. We are looking at 70 basis points, as you rightly said. We have already grown, and going forward with the kind of demand that we see for insurance products and the way we are seeing the insurance protection being in a great demand. And the way that we are able to sell with our technology, with our having more agents added to our employee numbers being also growing, and also the productivity coming back to normal. So I think that overall our VONB margin should continue to show a healthy growth.
Mr. Sharma, the individual protection AP grew by about 58% on a year-on-year basis versus a decline of about 36% on a year-on-year in Q1. And also even your group protection witnessed a good growth of about 88% on a year-on-year. So what contributed to this particular growth, and where do you see the share of protection rising to?
So I would not like to predict any numbers for where we will be. We are seeing an increase in the production share, and this is a result of two things. One is that the demand for protection has become, people have come to realize that apart from taking care of their health, they also need to take care of their financial immunity. And protection, demand for protection in insurance is one of the direct results of that. And as a result of that, we are seeing that our products in protection are showing good movement. And the other thing is that we have excellent protection products, and we also hope to have some more products coming forward, subject to clearances and all, and that will also help us to increase the protection share.
Right, sir. And the level of disbursements by banks and NBFCs has seen some improvement. So how do you view the contribution of bank partnerships in the overall distribution mix, and how are you ensuring ramping up your digital infrastructure?
Digital infrastructure, actually, we have end-to-end solutions. We can actually onboard customers, and right up to the claims, both maturity and death claims, everything can be handled digitally right now. So we are already there, and improvements will be there. The regulators have come out with many new enablers which will help us to do business digitally, doing away with wet signatures, and then also the video KYC which has come in. So we are evaluating all those things, and we are able to say that we can digitally we can offer all products, and our digital onboarding as it is already 98% of all the applications are coming digitally, and 24% of our underwriting is done, auto underwriting is happening using our digital tools, including artificial intelligence. So having done all that, digitally we are very strong and very strongly poised to take business forward. And so we already have that in place.
Okay, and the company's total APE grew by 3.6% YOY. Although the situation has improved and there is recovery in the business, when do you expect APE to turn positive and normalize to earlier levels?
So we already see a lot of businesses, like the Ulips and also other individual products selling very well in the Q2. And Q3, we expect a pickup because Q3 is always a very good quarter for us every year, and Q4 also is generally strong. So what we are seeing now is that the trends are very encouraging, and I think we'll be able to negate the degrowth or whatever has been there in the first quarter going forward and finish strongly.
Mr. Sharma, let's talk about the Ulips. You said that they have seen an improvement in demand. So given the sharp recovery in the market, so how do the demand for the Ulip, how is the demand for the Ulip panning out for the next 1 to 2 years? And also if you could share with us your product strategy for FY21.
So Ulips have been doing well, like I said, but if you look at our Ulip portfolio, debt is also a very strong flavor that we have. People don't go in only for equity Ulips, but they also go for debt. And so it's a very healthy mix of debt and equity. And as a result of that, we are seeing, and people have seen the strong growth that we have given in the past and the good returns that we have delivered. And that has resulted in our being able to, finish off well. The other part which I think I would like to say is that, credit life, one of the questions which you asked, I think I didn't respond on that. Credit life is already at last year's levels. And so we see that also coming up strongly. And now that disbursements have started, like you said rightly, so that will also help us to increase credit to under the bank umbrella.
All right, Mr. Sharma, we leave it at there. That was Mahesh Kumar Sharma, who's the MD and CEO of SBI Life Insurance. All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now, but stay tuned, more on the other side.
Hello and welcome back to Buy Now, Sell Now. Are there signs of a recovery in Q2? Is the electrical segment recovering and are the margins sustainable? We're about to find out as we catch up with the management at Vanguard. Sudarshan Kasturi, who's the Senior VP and CFO, Finance and Accounts at Vanguard Industries, VGuard. So, good morning, sir, firstly, and thank you for taking on the time to talk to ET now. Let's begin by a quarter that just went by. It seems to be a very good quarter overall. Majority of the segments were showing signs of recovery. So how's the demand shaping up now in Q3, and how far do you think you currently are from pre-COVID levels?
Gradually and continuously getting better. Like you said, definitely much better than Q1. Between July, August and September, there was continuous improvement. So in most markets, things are more or less coming back to normal levels. So, and we see that continuing in October also.
All right, sir, and after a weak Q1, the margins are finally back to double digits. So are these margin levels now sustainable for the rest of this year, or was there a one-off this quarter?
Yeah, I mean, on margins, we are comfortable. Over the years, our margin profile has also improved. So these kind of margin levels we can maintain. Luckily, our portfolio is getting stronger. There is some premiumization that's happening. There are, a range of innovations that's coming in, which is giving us some pricing ability. a combination of these aspects. So fundamentally, a double-digit EBITDA margin is something we should be able to maintain.
This is Cheryl also joining in. With the supply issues having been resolved and the onset of festive season, what kind of demand momentum are you actually expecting going forward?
Demand seems to be okay. I would say near about pre-COVID levels coming up. We are hopeful about the festive season. In this quarter we went through some supply disruptions which impacted our top line. There were some significant issues, but that's behind us now. And now that the supply issues have been resolved, we should expect Q3 to be a normal quarter, I would think.
All right, hang in there, Mr. Kasturi. Let's just go across to the Hero MotoCorp management, who's addressing post their numbers in a con call.
On the floor for questions, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kumar Rakesh from BNP Paribas. Please go ahead.
Hi, good morning. Thank you for taking my question. My first question is around the Harley-Davidson partnership. Can you share some details around how the revenue sharing partnership would work, and what do you exactly mean by premium motorcycles? Which all segments we would be developing and selling under the brand name of Harley-Davidson?
Right. So Rakesh, as we explained, it's going to be premium range. Obviously, the exact details of which CC and the specified range we will not be able to share at this stage. But clearly, it's going to enhance and accelerate our journey in the premium segment, as there would be licensed bikes which we will develop, which will carry the Harley badge name and therefore be marketed. So it will straddle across the different CCs.
And revenue sharing partnership?
So this is licensed, so there isn't a revenue sharing arrangement as we have said. There would be economic incentives.
त्यांनी तुमच्या कॉलला होल्डवर ठेवला आहे. कृपया
MotoCorp management addressing in the conference calls where they're talking about their sales momentum in two-wheeler strong. The company was the first one to recover post-COVID-19, and he's also talking about the festive demand and also the tie-up with Harley-Davidson. On that note, we'll slip into a break on this edition of Buy Now, Sell Now. Stay tuned, more on the other side.
Hello and welcome back to Buy Now, Sell Now. You're watching ET Now. We're now going to catch up with the management at PNB Housing Finance, the MD and CEO, Mr. Hardayal Prasad. Thank you, sir, for joining us this morning. Disbursements have witnessed an improvement sequentially. An outlook for H2 of FY21 also seems good. But when do you think that you'll be able to come back to the pre-COVID levels?
Well, we had reached almost 88% of the pre-COVID levels. This month, we are already seeing almost about 20% more numbers, both in terms of the acquisition that we do as well as in terms of the sanctions that we do. And therefore, I think we are going to cross the numbers that are coming up, we are going to cross our pre-COVID numbers. That's a very good sign in terms of the business that is coming back to rails. However, in terms of the prospects and what we are going to do in the next 6 months, we are going to have a very calibrated and a gradual growth that we are going to look at it. The interactions that we are having with the builders is very clear in terms of the footfalls that still remain highly muted. However, the conversion at the builder's office have definitely gone up. Now, that's a good sign for us if the conversions go up. Though the less number of people are coming, but if the conversions go up, at least people come prepared to buy a house. They've done their due diligence on the builder and everything, and they come. What we are looking at in the way we are going to grow is actually there are certain segments that we are going to grow in. First of all, affordable housing and Unnati is one product that we are looking very closely, and we will continue to push it because our expectation and the numbers that are coming in is tier 2, tier 3 is coming back strongly. All those people who had moved to these smaller towns back home are likely to buy houses, and there are a lot of inquiries that are coming in. So going forward, unless there is a second round of COVID, which I think in Europe is seeing the second round coming back in a big way, if it doesn't come in India, I think we should be on course to get good numbers in the next quarter.
Right, sir. And now that the moratorium has ended, what are the asset quality trends that you're foreseeing, and how much stress do you expect to reflect in your books?
It's a little premature at this stage to say that what the severity of the COVID is going to have on the portfolio. For one simple reason that the moratorium came to an end. However, because of the sub judice issue and then subsequently Supreme Court coming out, the government of India coming out with a scheme, people, all those borrowers who had not been or refusing to repay to us because they were waiting for some kind of a direction or some kind of a judgment from the Supreme Court, I think those are the ones who have started coming back and they have started repaying it. The collection efficiency that we see today is almost at 95%. And what it would mean is that the billing that I do, which includes all those people who are on the morat and non-morat, all those that we bill in a month, almost about 95% of the people are paying it. It's a very, very good sign in terms of what holds for us. However, I would still say that the full impact of COVID on the economy is not there. I think government has been talking very clearly that they are going to have a flattish growth. And we expect that by the end of this quarter, we would know what is going to happen on the NPAs. At this stage, even if I say that we have a lower number, it really doesn't have any meaning because we would like to see the full impact. In fact, what we have gone ahead and done is that all those which had been put on the which were not supposed to be declared as NPA after 31st of August, those also we have treated them as if they were NPA, and we have provided for that if they were NPA.
Mr. Prasad, this is Cheryl also joining in. Let's talk about the provisions, and provisions continue to be at an elevated level in Q2, understandably due to the uncertainty around COVID-19. But how do you see the provisionings for the coming quarters now?
Actually, provision is always good in uncertain time. And all of us are aware that these are quite uncertain times that we are living in. And therefore, to barricade oneself, to barricade the balance sheet, building a good provision coverage ratio is good. What we have done is to increase the provision coverage ratio to almost about 115%, which is something that we will continuously look at, that what kind of provisions. I think the more important thing is that if the write-off starts or if there are issues that come up, at that stage, what is the kind of provision that I can always actually make changes to the provision. We can go back, and if the accounts do not move from stage to stage, right up to stage 3, I can always have a provision coverage ratio which is optimal. What is very important is that how do we ensure that there are provisions, and this business, despite the fact that it is a mortgage-based business, it has a security sitting over there. Still, if it is provisions are there, I think, in my opinion, there is no harm in actually looking at it with a little bit of a doubt that the provisions are going up, which means that these are prudential norms, these are the Ind AS norms, and one would always look at it, the trends, and the trends come for 4 or 5 years. You look at the portfolio at various buckets and say that, okay, based on it, you need to provide these. Once these moratorium issues are over, and from this month onwards, I can tell you with efficiency, collection efficiency coming at 95%, people will start repaying us and the accounts will start moving from bucket 3 to bucket 2 to bucket 1, which is important for us. And once that starts happening, you will see that we may have reached a provision levels which are optimal or which are the right ones that would take place.
All right, Mr. Prasad, we leave it at there. Thank you for joining us and taking us through the Q2 earnings for PNB Housing Finance. That was Hardayal Prasad, who's the MD and CEO of the firm. And on that note, we'll slip into a break on this edition of Buy Now, Sell Now. Stay tuned, more on the other side.
Hello and welcome back to Buy Now, Sell Now. We're a bit late this morning to let you know who won the quiz, but let's just do that. Our question was, which bank reported the largest drop in provisions in Q2 FY21? The options were AU Bank, Kotak Bank, Axis Bank. The correct answer on absolute terms is, of course, Kotak Bank, which saw its provisions 1/3 from 960 odd to 360 odd. So we have three winners this morning. Ashok Kumar Kanaparthi is our first winner. We then have Mukesh Kumar Agarwal, and then we have Jay Shan, who's quite a regular and he's quite good at these. He keeps getting them right. So congratulations to all three of you. Please keep tweeting to the ET Now handle every day, and we'll be giving you more and more questions to test your knowledge on the markets.
And with that, we are out of time in this edition of Buy Now, Sell Now. But before we wind down, Times Network Special Investor Education Initiative, Nivesh Ke Fande will seek to guide investors on better managing their financial portfolios and also provide them with simple explanation on how some of the financial products work. And on this edition, we are looking at ETFs, or exchange traded funds.
One investment avenue which has been gaining popularity over the last couple of years has been exchange traded fund, or ETF.
That's true. Now, ETFs are funds that invest in a debt or equity index or commodities like gold.
Yeah, their expense ratio is low since they are passive investments, so they're available at a low cost to investors.
For example, an ETF that's based on a market index will invest in stocks of the companies in the same ratio as they're represented in the index.
So the performance of that ETF will rise and fall almost identically to the performance of that index.
To invest in ETFs, an investor will have to have a demat account, as they are bought and sold through the exchanges.
And this very aspect makes ETFs highly liquid, since they can be bought and sold like regular stocks at any given point of the day.
So do consider adding ETFs to your portfolio. That's all from us on this edition of Nivesh Ke Fande.